Welcome back. In the last video, we calculated depreciation for equipment that we bought for $60,000 that has an estimated salvage value of $40,000 and a useful life of 4 years when we use the straight line method of depreciation, and 80,000 units when we use the units of production depreciation method. We prepared our depreciation schedules. Now it is 3 years later. We bought the equipment on October 1st, 2016. It's now October 1st, 2019, and we are going to sell the equipment. We can use this same method for any time we dispose of equipment. So we don't have to sell it for cash, although that's going to be the easiest example and the one we're going to use. We could give it away. We could trade it away. We could just throw it away. There's all kinds of things that could happen, but we are going to sell ours for cash. So on 10/1/19, we sold the equipment for $2,000. So the first question is, what is our total accumulated depreciation prior to the sale? We're going to need to know this so that we can calculate the net book value and the gain or the loss on the sale. All right, so we sold it 3 years after buying it, so that's going to be the end of year 3. And under straight line, our accumulated depreciation will be $18,000. Nope, that's wrong. That's the book value. Sorry about that. Let's start over. Our accumulated depreciation will be the sum of all of the depreciation we have booked so far. So that's going to be $14,000 in year 1, plus $14,000 in year 2, plus $14,000 in year 3. So our accumulated depreciation under straight line at the end of year 3 is $42,000. That sounds better. Under units of production, we are going to, let me move this up here, do the same thing. So we are going to do the sum of the first 3 years of depreciation, because we're at the end of year 3. And when we add up our first year depreciation of $14,000, our second year depreciation expense of $11,900, and our third year depreciation expense of $15,400, we get total accumulated depreciation of $41,300. When we go to dispose of an asset, it's really important that we understand our accumulated depreciation specifically for whatever method we're using. I haven't said this before, I'll just throw it in here. Once you start with the method, you got to stick with it for the whole life of the asset. Unless you have a really, really good reason, you're going to have to come up with a ton of documentation for your auditors. It's probably not going to be worth it. So we're going to use one or the other, not both. All right. So now we're going to do our journal entry to record the sale. And, you know, let's just go ahead and jump in and do it. Okay, so under the straight line method, we are going to debit. So the first thing we need to do is we want to recognize whatever we're getting. In this case, it's cash of $20,000. Okay. Let's just do a little formatting. Okay. The second thing we want to do is zero out our accumulated depreciation account. So under straight line, our accumulated depreciation is $42,000. Remember, accumulated depreciation has a natural credit balance. So we want to debit accumulated depreciation for $42,000. Okay, I'm going to skip a line because I don't know yet if I have a gain or a loss. A gain will be a credit, a loss will be a debit, so I'm going to skip a line until I figure it out. So I'm going to credit my equipment account because I want to zero out the equipment. Once I sell it, I don't have it anymore, so I need to get it off my books. When I first bought the equipment, I debited $60,000. So to zero that out, I need to credit $60,000. Okay, now I'm going to compare my debits to my credits. I have a debit of $60,000. I have a debit of $20,000 plus $42,000, which is $62,000 total. And I have a credit of $60,000. That means I need $20,000 more credit, or $2,000 more credit. And if if I have a credit, that's going to be a gain. So I'm going to book gain on disposal of equipment for $2,000. Okay, pretty good, right? If I wanted to calculate the gain ahead of time, I'm just going to do it right here. I could do the cost of the equipment. Here, we'll do this here. Equipment, 60,000 less accumulated depreciation, which was 42,000. That's going to give me a net book value of 18,000. And when I compare that to the cash I received, I can see that I'm getting 2,000 more than the net book value, and that would be my gain. All right, let's do the same thing using units of production. So first, we are going to debit what we got, which is still cash. Jeepers creepers. I'm going to debit cash because we received $20,000. Too many zeros. Okay. Then I'm going to zero out my accumulated depreciation. And I think in order for you to be able to see this, we're just going to go over one column. All right, my accumulated depreciation under units of production is 41,300. So that becomes my debit to zero out that account. Again, I'm going to skip a line and I'm going to credit my equipment. And yes, this should be indented, but I just haven't indented it. Okay, 60,000. For some reason, we didn't quite get the formatting here. All right. So now I look and I see that my total debits are 61,300 and my total credit is 60,000. So I need an additional credit of 1,300. Now my debits equal my credits. I know that a credit is a gain, so I'm going to credit gain on disposal of equipment for $1,300. Okay, pretty simple, right? Now let's go through another example. Let's say we have the exact same equipment and accumulated depreciation, only now we're going to sell the equipment for $10,000 instead of $20,000. So let's give it a go. We're going to debit cash for $20,000. We are going to debit accumulated depreciation. This is the exact same equipment at the exact same period of time. So everything is going to be the same except for the cash, which we only received 10,000. Let me fix that. And let's just do some formatting here so it doesn't annoy me or annoy you. Okay. I know I've got a credit to equipment for 60,000. All right, now let's compare our debits and credits. I've got debits of 52,000 and a credit of 60,000. So I need additional debit of 8,000. And when we debit, we have more, basically we receive less cash than the net book value. That's going to be a debit to loss on disposal of equipment. Okay. And again, if I want to calculate that, I can just do it right here. My equipment is 60,000. My accumulated depreciation is 42,000. And my net book value is going to be same as it was before, 18,000. Okay, so if I have a net book value minus the cash received is 10,000. Go ahead and put that as a negative. Then I have a loss of $8,000. Okay. Oh, this should be the other way. You know what? Let me do this differently for you. So cash received is going to be 10,000 minus net book value, which is going to be minus the 18,000. And that's going to give me the negative 8,000. The negative is what lets me know it's a loss. If this was positive, then it would be a gain. So we take our cash that we received, or whatever value we receive, and subtract our net book value. All right, so let's go over and do the same thing for units of production. So we're going to debit cash of $10,000. We're going to debit accumulated depreciation of 41,300. I'm going to credit my equipment of 60,000. Okay, so I've got a credit of 60,000. I've got a debit of 51,300. So I need more debit, and I can't do this in my head, plus, minus, plus 60,000 minus 10,000 minus 41,300 would be 87,000, and that's going to be the amount of my loss. Do the same thing. I'm just going to copy this over. I'm going to put the new numbers in it. Okay, so we have our equipment was 60,000. Our accumulated depreciation was 41,300. So our net book value was 18,700. We received 10,000 in cash. So our loss is 8,700, which is right there. All right, that is how we calculate a loss on the sale of equipment or any sort of fixed asset. Now you've done how to calculate a gain on the disposal of equipment and a loss on the disposal of equipment. All right, we'll see you next time.